That's the big one. Now, if you just did those two, it still wouldn't work. We know this again from history. Part 3. The Congress is made aware that they are able to spend money into existence. They don't have to get it from either taxes or borrowing. Right now, they think the only way they get money is from taxing us or borrowing from the wealthy. And Part 3 is that the government is enabled to start spending money into circulation. Where do we start? We start with the infrastructure. The engineers tell us there's $2.2 trillion needed for infrastructure over the next 5 years. That's about $550 billion a year. That's all quite doable. The banks were creating before the crisis around $700-800 billion a year, putting it into junk, putting it into mergers, acquisitions, which essentially created unemployment, putting it into incredible loans for housing, which, of course, had to eventually collapse. The government starts to spend money into circulation, and where do we start? The infrastructure. Everybody wants the infrastructure. There's nobody will tell you, no, we don't need infrastructure. The infrastructure is the basis of our civilization. Those are the pillars of our civilization. And the fact that the engineers tell us you need $2.2 trillion to make it safe, that shows you, that's absolute proof that the existing monetary system was either unable or unwilling to do what you had to do to have a society. What did the economists say about that? Darn little.
I want to go back to the part where you talked about putting this money power into the government's hand to put money into existence to spend on needed infrastructure. I get that part. What I'm having trouble with is the part about spending money into existence by not taxing people or borrowing. How does it get out of that mode? How does that occur?
Well, the government creates the money the same way the banks do now.
Won't it alter the M3 number?
Forget all that.
Why?
Get that stuff. That's part of the economic jargon, and they've long forgotten that, and they even stopped publishing it.
Well, I think it's because they don't want us to know how much money's being printed.
I wouldn't worry about it.
But I still want you to deal with the people that may be listening that have a concern for that element of the money supply, because that's what the M3 is.
First thing, they have to understand why they have that concern. Do they have that concern because the economists and the whole economic education system told us that was the important thing to look at? Because if those are the reasons, then you can just forget them.
Well, what about inflation and deflation and the amount of money in circulation and that relationship?
Yeah, no, that's important. And what the Act will do is create a monetary authority whose job it is to keep a very careful eye on that and create targets that have to be fulfilled, and if they're not, they get reported on very quickly, and then changes have to be made. All of this is within the Act.
Just a question about the detail. I'm sure that it's covered. The paradigm with people that think they understand the economy, whether they're economists or other people in finance, is that if you put a bunch of money into circulation that doesn't get used for anything, you could inflate the currency.
Well, again, these are theories, okay? These are theories. And in fact, when you say people who think they know, that's the correct concept. They think they know, but look at the results of their thinking, Kim. How many of them warned what would happen here? I can tell you the economists who addressed our conference, they did warn and were ignored. One of them even warned in a cover story in Harper's Magazine exactly what would happen and pretty much when. That was Mike Hudson did that. And he was pretty much ignored until it actually came apart. So you have to be very careful with attributing great talent to those economists.
So what happens when this monetary power has the ability to create money into the infinite? How does this affect trade?
It doesn't have the power to create money into the infinite. The monetary authority that's created in this act,
right?
Their assignment is to make sure that the spending is neither inflationary or deflationary.
How do they accomplish that? I mean, that's a worthy task, but how?
By designing targets for how much money there should be and sticking to those targets. If anything, it's probably going to go the other direction, more deflationary. Monetary reform historically, by the way, has tended to be deflationary rather than inflationary in the past. We don't want that to happen in this case, which is why we put the third point into the act, the infrastructure repair. You see, this act didn't just come out of thin air, Kim. During the last Depression, much of this act was already put together. By the way, we had great economists in the last couple of generations ago. And out of my alma mater, the University of Chicago, came the most brilliant plan for ending the Depression and making sure that the banking system did not collapse around us. And it was created by an economist by the name, a genius by the name of Henry Simons, University of Chicago. It was quickly supported by other great economists, Irving Fisher from Yale, Paul Douglas from the University of Chicago, several others. They're all described in chapter 24 of my book. They created what was called the Chicago Plan, named after the university. And it did two things, Kim. And it wasn't afraid of using the word nationalization. It nationalized all the Federal Reserve banks, the Federal Reserve itself, not the private banks. That was the first step. And the second step, it stopped the banks from creating money.
What will the banks do if they can't create money?
Oh, good question. Where will the banks get money to lend?
What will they do? Yes, exactly.
Yeah, well, first of all, you've got all the money that's circulating now. Now, I gave you the 3 points. Those are the three essential things that have to be done. Incorporate the Fed into the Treasury, stop the banks from creating money, as they do now, and spend money on infrastructure. And we include in that human infrastructure of healthcare and education. This can happen. We've solved most of our nation's problems for the foreseeable future. You understand? It's a big deal. Now, in terms of all the details involved, a lot of them are at our website, monetary.org, where we have put a copy of the bill that Congressman Kucinich introduced on December 17th. It's all there, all 45 pages. The 45 pages are reduced to a total of 17, not using the format of law printing. What people need to do is just read the first section, which is 4 pages total, the findings of the Act and the purpose of the Act. Now, in terms of all the details, the monetary authority is there to see that neither inflation nor deflation will occur. And that'll be, that's a serious thing for them to do. They have, as an advisory group, they have representatives of all of the bodies which should be overseeing banking, trading, the FDIC, the Comptroller of the Currency, the SEC. All of the groups that have powers in this area will form an advisory group to the monetary authority, so that they should be well equipped to move forward and do these things. And they'll be watched.
In concept, I like it, but in one way, it reminds me a little bit of centralizing the power of the pocketbooks in Washington. It's almost like putting a central banking function. I know that's not what you want, but it seems like that's what it is.
Oh, it is.
Okay.
Yeah. No, there's not no problem with that. The control over the monetary system, differentiate this from the banks now, because you've got all kinds of crazy promotions out there right now. One, for example, to nationalize all the